the founder and CEO of Stelrix is here, which is really interesting. It is a fintech company building a new category of what's called investment-backed credit. And they say in their website, as you can see, not credit, it's capital. It's the first and only investment-backed credit card, meaning that I need to interview this guy because I have no idea what it is.
Colin Sahagun is the founder and CEO, as Sully just mentioned, Stelrix. Stelrix.com is the website. We welcome him to the Big Business Show. Colin, how are you?
Doing great. Nice to meet you guys. Happy to be joining you today.
Colin, first of all, tell us what investment-backed credit is. What does that mean exactly?
Totally, yeah. It's a completely new category, right? And we really hone in on communicating that. So essentially, you connect your brokerage account and you can spend against it, just like a secured line of credit, anywhere a payment network is accepted.
Is it investment accounts already have margin accounts? So in other words, if you have, let's say $100,000 worth of investments, you can margin to buy more stock up to 50% of that. Are you sort of margining in terms of purchasing power? Is that sort of the same thing?
Yes and no. So technically, we structured it more real time, right? So it's in a credit card. We manage all of the risk, and it's not your brokerage doing the lending, meaning the way we structure margin call is much more sophisticated, and you can spend at any point of sale terminal in the United States.
And are you drawing directly out of your investment account, or are you creating credit because of the assets?
Yeah, so we're creating credit because of the assets, right? So we don't look at your FICO or your income. It's strictly agnostic based on your investment portfolio.
Really? So let's say you've got a young college kid that has, sparked up, $25,000 in the bank, something like that. And is that your target, or are you targeting folks that have a little heftier investment portfolio? Because many of those people already have good credit and already have credit cards.
Yeah, of course. So our target audience really lies in that kind of heavier asset class, right? So these are people with a couple $100,000 invested. However, that same college student does qualify for a card. We're seeing a huge kind of new trend in that private wealth area where they're looking for much more simple tools to kind of streamline that process.
Colin Sahagun is the founder and CEO of Stelrix, the website Stelrix.com, based on his youthful appearance. The first 9-year-old CEO in the history of business out there.
By the way, are you out of college yet, sir?
I am not. Done in June, so almost there. I'm almost 10 years old, I promise.
Oh, my God. I'm sitting here just going, I've wasted my life.
Now, what about, I was just talking earlier on the show about one of my good friends who's a commercial real estate guy, who is worth $50 or $60 million in real estate. Not sure what his stock portfolio is like. Is that another thing you take into consideration, is real estate portfolio, or is it just strictly cash portfolios?
1,000%. So we've really mapped out a bunch of different asset classes. Equities, we've built that's done, that's out of the way, but we will be expanding into everything across cryptocurrency, commercial real estate, and a lot more.
I'm sorry, Colin, as far as the financial backing and the partners, the people that you had to sell this idea to, was it easy, or was it tough sledding at first?
I love this question. A lot of people don't ask it, so thank you for asking that question.
You're welcome.
But yeah, considering my youth, right, it's kind of hard to get the partners that we have today, but HSBC was our original supporter, and we've really kind of streamlined all those new partners just from that introduction. And so we all know each other, and there's a very high level of operational trust that we can work with.
So underwriting-wise, and I realize there's no credit check and so on and so forth, but let's say you have an art collector, or let's say you have a stock portfolio guy, and let's say you have a real estate person, and all of a sudden you have a guy that has a car collection that's worth $3 million. Who does that underwriting to determine what category that is, what the value is, and then what you can borrow against that, so to speak? What do those percentages look like, and what is that process? Is it 6 years? Is it like getting a mortgage, or is it a relatively quick turnaround and stuff like that?
Yeah, it's very quick. So the quickest onboarding that's possible through our app experience, I can only speak to equities, right? It takes 5 to 10 minutes, and you can be issued a card right away. Wow. So the way the underwriting works is our system will go into the user's portfolio. We have full access through our payment networks provider, and we can scan every single individual position, and you can spend between 10 and 40% LTV of that.
Did you say you're still in college?
Yes, that's correct.
Okay, teaching college.
Oh, all right. When do you sleep?
Never, right? So maybe every 9 minutes I get, but no, I love it. It keeps me up, and wouldn't change anything.
I'm just noticing on your website, it says it's really informative, but it also says reserve your card today. Are you guys almost active? Are you guys currently active, or are you? Is this something? Because we're getting a lot of email about wanting to get involved here.
Yeah.
There you go. So yeah, internally, we're fully tested and fully built out. This was probably the best time we can talk about the product publicly, but we're in the middle of our seed round. So right now we're just kind of picking what strategic partners to take on, which to kind of postpone to Series A, but we can launch in probably a 3 to 4 month period as soon as we close this.
Are they, so in your seed round, and just infotainment purposes here, when companies raise capital, they're not necessarily, you have a friends and family round, which got them to this point where you've got a website and everything else going. And then you do your seed round. And typically, since it's so tough to create a valuation for a company like this, and it's usually ambitious to say, hey, we're a $100 million company. Well, you're worth about, on paper, the computer and the desk you're sitting at, and you owe $100,000 in student loans. So what they do is it's called convertible notes. And I'm assuming you're going to do a convertible note or a SAFE to get first investments in. And what that means is you're actually loaning the company money that will be forced into forced conversion into equity when they do what's called their A round. And I think you're at the point where you could probably go right to an A round if you have the right partners, right? I mean, that doesn't happen often, but when you're in that position where they see something that's truly disruptive like this, are you still having to do a seed round? Do you think the A round's right behind it? And this is more of a bridge.
Yeah, you're 1,000% correct, right? We're doing safe notes on kind of a post valuation. We could 1,000% skip to an A. It's more so out of respect for our current investors, right? So we want to close the current round. But our Series A, we already know who's participating, so we're very confident.
Which means all those existing new investors, okay, although they will not be cashing out necessarily, they will convert into equity. And one day when Visa buys this young man for $500 million, those people that got in early will get to have an exit strategy. I need your number because I need to be able to somehow hitch my wagon to you. Give you free exposure for equity or something like that. Really good.
Have to get your card.
Let's follow this. Let's follow this this story. I love it.
Yeah.
Can't wait till you turn 21. It's going to be awesome, man.
Yeah, we're taking you out for your
First drink.
Colin Sahagun, founder, CEO, Stelrix, Stelrix.com. Not credit, it's capital.